Okay. See, the name of your new chapter is set off and carry forward. Set off and carry forward. Okay. Set off, comma, carry forward and set off of losses. So first you have a loss. First you have a loss. Don't talk. We have started a new chapter. Okay, no? So if you have any loss, then they are telling you to first set off the loss. And if you are not able to set off, no, then carry forward for its set off in future. Carry forward for its set off in future. Yes or no? So first the losses will be set off. This will be the first step. And if you cannot set off those losses in the current year, then carry forward to the subsequent year so that they can be set off from the incomes of subsequent years. Yes or no? So this will be the second step. Now set off provisions are given in section 70 and section 71. And carry forward, if these two provisions fail, meaning your loss is not set off during the current year, then the carry forward provisions comes into picture. Then which are the carry forward provisions? Section 71B is there, 72 is there, 73 is there, 73A is there, 74 is there, and 74A is there. We are supposed to do these sections. That's it. And very easy, very easy. If you will pay a little bit attention, little bit of attention, this is a very easy chapter. And I'm telling you, if you are lucky and you get a question from this chapter in the exam, direct question, it will be for minimum 8 to 10 marks. And I'll show you what type of questions they ask in the exam. Such easy questions they will ask, no? But this chapter the question can be made tricky also. But the questions are really very easy. You have to pay a little bit of attention, and this chapter is very, very, very easy chapter. Okay? And full cash marks. Revision also will not take much of the time. Within 15 minutes, you will be able to revise this entire chapter also. That easy chapter. And along with that, we are going to do one more section. Section number 80. Read with 139.3. Okay. So this section also we are going to do. Section 80. Read with section 139.3. Okay. Now see, first of all tell me, what will be my step? 3 steps will be there. Step number 1. Step number 2. And step number 3. In 3 steps, you are supposed to set off and carry forward your losses. Okay. So step number 1, 2 and 3. Step number 1 says that do the set off inside the head only. That is known as inter source set off or inter source adjustment. That is given under section 70. If you cannot set off your loss within the head, then make that loss the loss of that head. And now that loss of any head will be set off against income of other head. So that is known as inter head adjustment. Inter-head adjustment or inter-head set off under section 71. And if you fail to set off the loss within the head amongst the sources, yes or no? And you also fail to set off the loss in this year against the income of other heads also. Then you carry forward the loss. Then you carry forward to subsequent year, carry forward to subsequent year for set off against incomes of subsequent years. Yes or no? Then your provisions of 71B, 72, 73, 73A, 74 and 74A will come into existence. But while doing this, you have to take care of section 80, read with section 139.3. So tell me, if you and your brother or you and your sister, you are fighting, you resolve the issue between yourself, no? Inside the family, husband and wife are fighting. They will call outsiders, or first they will resolve the issue at home only. So if there is a loss under a head, if there is a loss of any source of income, that loss will be set off within the head against the income of any other source. But it will happen within the head. So first time the loss is calculated at source level. Which level? Source level means there are many sources of income. All those sources are classified under 5 heads of income. Yes or no? Now under the head house property, 4 house properties are there. So there are 4 sources of income under the head house property. Under the head PGBP, 3 businesses are there. So there are 3 sources of income under the head PGBP. Under the head capital gains, under the head capital gains, 2 capital assets are there which are transferred in this year. So 2 sources of income under the head capital gain. There will be different sources under the head IFOS also. Multiple sources under the head IFOS also. See, every time when I was asking you how many sources of income, how many heads of income, no, the reason was this only. You don't find this chapter difficult. Many of the people find this chapter very difficult because they don't know the difference between a source of income and a head. How many heads are there? 5. But under those 5 heads, we classify different sources. Employer-employee relationship classified under the head salary. House properties of which you are the owner and not using for the purpose of your business or profession classified under the head house property. Then businesses or professions will be classified under the head PGBP. You have capital assets which you have transferred in this year will be classified under the head, and all other sources of income will be classified under the head IFOS. Now whenever you bring any source under a head, then the computation of provision of that head are applicable on that source. So first take that source under a head, apply the computation provision of that head on that source. Now what are the computation provision? You take the income of that source, take the deductions which are allowed under this head, yes or no, from your source of income. So you take which income under the head salary? Employer-employee relationship, whatever income is there, you take that income under the head salary, and from that, what are the deductions available under this head? 16 clause 1, standard deduction, 16 clause 2, entertainment allowance, then 16 clause 3, professional tax. After taking those deductions, whatever income will remain will be the taxable income of that source. Just like that, you come to house property. 4 properties you have classified under the head house property. 4 sources of income. For every source of income, there will be some income, annual value. Out of that annual value, you will take deductions from every source of income. From every income, you are going to take deductions. 24A, 24B, 24A, 24B, 24A, 24B. And that way you are going to calculate income for each house property. Some property will be LOP, some property will be DLOP, some property will be SOP. So for every property, You will take the income and you will take the deductions. So the taxable income of each property will be there. But it is not necessary that every property will give you a taxable income. Some property might give you a loss. So your loss is calculated inside the head for the first time for that house property, for that source of income. So if somebody asks you that the loss is calculated for the first time, at what level? You will say source level. Inside a head for a source, a loss is calculated for the first time. Understanding? Now if you will come to PGBP, you have three businesses, yes or no? One business, income minus deductions. Second business, income minus deductions. Third business, income minus deduction. For each business, you will take income, income, income. For each business, you will take deduction, deduction, deduction. And for each business, you will get profit, profit, profit. But it is not necessary that every time you will get profit. Some business might result into loss also. So under the head PGBP, for the first time, the loss was calculated for a business, a source of income. Yes or no? And why losses are arising? Tell me. What is the reason because of which you get a loss? Because the taxable income of that source is less and the deduction allowed is more. So because of deduction being more, the loss will result. Understanding? So if there is a loss, that loss is calculated for the first time under a head for a source of income. So try to adjust that loss first inside that head only. That is section 70. Yes or no? Loss of a house property, will you directly set off against salary income? Will you directly set off against capital gain income? No. Loss of a house property, first it will be set off under the head house property against profits or positive income of other house property. Sir, what if other house properties are not there? This was the only house property. Or other house properties are also there. Even they are having loss. Or other house properties are there. They are having positive income, but their positive income is less as compared to this loss. Then the loss will remain. Cannot be adjusted within the head. When the loss will not be able to be adjusted inside the head? When there is no other source of income. Or when there is any other source of income is there, but that source is also having a loss. If any other source of income is there, that source is having a gain, positive income, but that positive income is less as compared to the loss of this source, then the loss cannot be adjusted within the head. That loss you make the loss of this head now. Now that loss will become the loss of this head. Now do the second step. Now if the fight between husband and wife is not resolved, then the relatives or the parents, others will come to resolve that fight. Yes or no? Hello. So now who will come? Others will come. They are themselves fighting. Different heads. Yes or no? Husband and wife are fighting. So first they will resolve. Their thing is resolved, so they have a positive income. Understanding? So your loss of a head will then be set off against positive income of other head. See, this year the loss cannot be adjusted within the head, no. Then no problem. You can adjust the loss against income of other heads also. Now the loss will become the loss of this head, and the loss of this head will be set off against income of other heads. Section 71. But 71 will come only after 70. If the loss cannot be adjusted within the head, only then you will come to step number 2. Yes or no? Only then the loss will be adjusted against the heads. Now, for example, no other head of income. Then the loss of this head cannot be set off, because no other head of income is there. Sir, other head of income is there, but even that head of income is having a loss. Sir, other head of income is there, but that head is having a less income as compared to loss. Now the loss cannot be set off in this year. Inter-head set off is also not helping me to set off the entire loss in this year. Then they are saying, no problem. If section 70 applied, loss could not be adjusted within the head. 71 applied, then section 71 applied, loss cannot be adjusted in this year against the income of other heads. Then no problem. Following losses you can carry forward. All losses you can carry forward, or only the following? Only the losses which are specified. Only the losses which are, these losses will be carried forward. This is your house property loss. This is your normal business loss. This is your speculation business loss. This is a loss of a specified business. This is a capital loss, short-term capital loss, long-term capital loss. And this is a loss from an activity of owning and maintaining racehorses. These losses we will allow you to carry forward. Any other loss other than these will not be allowed for a carry forward. Carry forward of only these losses is allowed. Yes or no? Because carry forward is not your birthright. Carry forward is not your right. Carry forward is a privilege which we are giving you. If we are giving the carry forward privilege, only then that privilege can be taken. You cannot ask it as if it is your right. So we are allowing the carry forward of which losses? House property loss. We are allowing the carry forward of which losses? House property loss. Then normal business loss. Then speculation business loss. Then business loss of any specified business. Then capital losses, short term as well as long term. Then the loss of an activity of owning and maintaining racehorse. All these losses will be carried forward in the subsequent year if they cannot be set off in current year. And after their carry forward, how they will be set off? Against which income of the future they can be carried forward? Yes or no? For how many years maximum they can be carried forward? If that income is not available in the next year, then they will be carried forward the next year. Sir, next year also, if that income is not available, then next to next year. Likewise, for how many years the losses can be carried forward? All those things are given in carry forward provisions. Yes or no? So now, which will be your first step? Come on. Section number 70. What this section says? Inter source. Inter source what? Okay now? Inter source adjustment or inter source set off. Done no? Now tell me. Loss will be calculated for the first time inside a head for a source of income. Why that loss will arise? Why that loss will arise? Because the income of that source was less and the deductions available from that income was more, resulting into what? Loss. So section 70 says that loss of any source of income, loss of any source of income can be adjusted against positive income, against profit or positive income of any other source of income under the same head. So within the same head, if you have any other source of income giving you a profit or a positive income, against that profit you can set off the loss of this source. But it has to happen within the head. So house property to house property, business to business, yes or no? Capital loss to capital gain. Yes or no? And sources under the head IFOS, those sources are giving you what? Loss. So income of those sources can be set off inside the other sources head against the income of all other sources. Yes or no? So this you have to do within the head first. But while doing this, there are certain exceptions. So what is important for you to now know? This is a general rule. General rule says that under a head, loss of any source of income within the same head can be set off against income of any other source of income. This is a general rule. But this general rule has certain exceptions. This general rule has certain exceptions. You are going to be very, very, very careful about these exceptions. Most IMP. Okay. If you don't remember these exceptions, there is no point of studying set off and carry forward. Because the questions will be framed. In those questions, these exceptions will be exploited. Getting my point? So, exceptions will go head by head. Okay, no? Which is the first head? Salaries. Okay. Can you have a loss under the head salary? Yes or no? Sure. Time is correct to ask you for your SRO number. You will have a loss under the head salary. What did I say? When you will have a loss? When the taxable income of a source is less and the allowable deductions are more. Only if the deductions are higher than the taxable income of that source, only then the loss will arise. Go in the salary head. The income is taxable. Bloody everything you receive from your employer, even you receive peanuts, that will be your salary. So one thing, two thing, no, multiple things are treated as your income. So income is this much or this much? This much. And just imagine what type of deductions you get there. Standard deduction. 50,000. Oh, following 115 BSc, 75,000. Entertainment allowance, maximum 5,000. And that too also you are a government employee and not following 115 BS. Only then you get that 5,000 also. Professional tax. Full year, a year's professional tax in any state you will go, no, is maximum 2,500 in any state. Full year professional tax I am talking about. So on the name of deductions, no, they are just kidding with you. Under the head, salary. Because the deductions will be a very, very, very small amount as compared to the taxable income under that head. Meaning, the deductions are never going to be higher as compared to taxable income under the head salary. So under the head salary, you are not going to get any loss. And if you are getting, bring your SRO number. Why you will not get loss under the head salary? Because the taxable income is more and the available deduction is very less. Hence, there will be no loss. Okay, no? So, no loss. Hence, ignore this situation. Ignore the head. First head is done. In the head salary, you will calculate taxable income only. There will be no loss. Understanding? Which is the second head of income? So, head by head, you are supposed to move ahead. Okay, no? House property. In the head house property, no restriction. First of all, loss can be there or not? Tell me. Under the head house property, will you calculate a loss of any house property? Sir, bloody that SOP will have a loss only. Either the income will be nil or it will be a loss because of interest deduction. Yes or no? Interest is allowed up to 30,000 or 2 lakh if you don't follow 115 BSc. If you don't follow, okay, then because of that interest deduction, SOP will have a loss. Even sir, my LOP or DLOP can have a loss, whether I follow 115 BSE or I don't follow 115 BSE. Interest on loan is allowed from LOP and DLOP, and that too also fully, without any monetary limit. So out of the NAV, 30% standard deduction is taken. Till that time it is a profit. But the moment the interest deduction will be taken, and interest is a very higher amount, then it can give you a loss. Loss of any property can come. Yes or no? Did I tell you at that time? You cannot set off SOP loss against LOP. You cannot set off LOP loss against DLOP. What we used to do, we used to calculate the income of each property. Some property giving you income, some property giving you loss. Then we used to add all of them and we used to calculate one single income. Yes or no? Knowingly or unknowingly, you were doing inter-source set-off at that time. Unknowingly. Because loss of any property can be adjusted from profit of any property. There is no restriction on that. Understanding? SOP loss can be set off against LOP or DLOP. DLOP loss can be set off against LOP. LOP loss can be set off against DLOP. LOP and DLOP loss can be set off against SOP. SOP will never have an income only. But there is no restriction. Yes or no? Any property's loss is there under the head house property, that will be set off against income of any property. There is no restriction. Getting my point? So can I say under the head house property, loss of any house property can be there? Yes or no? Set off is available against, tell me, profit of any house property, positive income of any house property, meaning there is no restriction. No restriction. Understanding or not? So two heads are done. Now let's move to the third head of income. Which is the third head of income? Now be careful. Under the head PGBP. Under the head PGBP. Can you have a loss? Loss of any business or a profession? Tell me yes or no. So loss of any business or loss of any profession. Can you set off this loss under the head PGBP only? Yes. First, try to set off this loss under the head PGBP against profit of any other business or any other profession. Yes or no? But wait, while doing that, no, you have to remember that the businesses are of three types. 1, 2 and 3, if you remember. 1 is speculation. 2 is specified business. Yes or no? And 3 is normal business. The business which is not a speculation or a specified business. There is a restriction. What did I say? That loss of, what did I say? Loss of any speculation business can be set off only against profit of any other speculation business. Do you remember? I have already told you this. So speculation business is having a loss. That loss cannot be set off under the head PGBP against the profit of any business. No, not allowed. Restriction is there. Loss of a speculation business under the head PGBP can be set off only against the profits of any other speculation business. Understanding? And there is a restriction on the loss of specified business also. Do you have a specified business? Remember the names of the specified business. Which are the specified businesses? Come on, tell me. Specified business, specified business. Hospitals having 100 beds or more capacity, hotels having 2-star or above category, laying and operating cross-country pipeline network for crude oil, for transportation of crude oil, natural gas. Yes or no? Manufacturing of fertilizer, then honey and honey beeswax. Yes or no? Then there is warehousing facility for storage of agricultural produce, storage of sugar. All those businesses are specified business. Few more businesses are there. List of 15 businesses given. So can any business give you a loss? Yes, any specified business can give you a loss. And the loss of any specified business, restriction, it cannot be set off against profit of any business. No, not allowed. Under the head PGBP, if you want to set it off, it can be set off only against, tell me, profit of any specified business only. Profit of any specified business. Whether for this specified business, deduction under section 35 AD was available or not available is irrelevant. So if you have a loss of any specified business, then that loss of specified business can be adjusted only against the profit of any specified business. But it is not required that if you want to set off the loss against the profit of specified business, for that specified business you are getting the deduction under section 35D. You might get or you might not be getting the deduction under section 35D. For example, two businesses are there, business A, business B. Business A is also a specified business and business B is also a specified business. For business A, you are claiming 35AD deduction. Why? Because all the conditions of 35AD are satisfied in business A. Then you are getting the deduction under 35AD. But for business B, you are not able to claim deduction under section 30. Business B is also a specified business. But for business B, you are not getting deduction under 35AD. Why? Because maybe the conditions of section 35AD are not fulfilled for business B. Yes or no? Now there is a loss of business A, specified business. What is said? That this loss has to be set off against profits of any other. But there is no requirement that the profits against which, the profits of the business against which you want to set off, for that business also you must be claiming 35AD deduction. There is no such requirement. So loss of business A can be set off against profit of business B? Yes, because business B is a specified business. Whether for business B you are claiming 35AD or not is irrelevant. Understanding? But you have to remember, the loss of a specified business cannot be set off against profit of any other business. It will be set off only against profit of any specified business only. So restriction for losses of these two businesses there. Under the head PGBP, do you have a speculation business? Speculation of shares resulting into losses. Can it be set off against textile business income? No, because that is your normal business income. Against normal business income, you cannot set off this speculation loss. If you want to set off, do you have any other speculation business? Yes, sir. I have speculation business of bullion. So I'm speculating in bullion also. And that business is giving me a profit. So speculation of shares can be set off against speculation of bullion. Speculation of bullion is having a loss, can be set off against speculation of shares. They can be set off against each other, but they cannot be set off against income of other businesses. Why this collaborativity? Why this restriction? Simple. Speculation business, majority of the time, is going to give you a loss. In almost every speculation business, you will have a loss. Why? Because speculation is what? Price movement only. You are not interested in taking the delivery. You are just buying and selling without taking the delivery. You want to play in the price fluctuation, and that price fluctuation happens because of market forces, demand and supply, which is not in your control. So since you cannot control the demand and supply forces affecting the prices, so there is no control over the price. So maybe you buy at lower price thinking that I'll sell at higher price. You are not able to sell at higher price. You sell below that also, below the purchase price also. Yes or no? Resulting into losses. Majority of the times it is seen that in speculation you will incur losses only. You will incur. And knowing that we allow you the set off of this loss against other business, we are not that fool. Do you have any other speculation business? Yes. So we were thinking that from that business also you are not going to get any income. For that business also there will be a loss. But fortunately you are having a gain in that business. We were not expecting that gain also. If you set off this loss against that gain, no, which we were not expecting only, then it will not hurt us. But it will hurt us if you set off against any other business income. Understanding or not? So hence speculation only against speculation. Getting my point? Now why specified only against specified? Do you remember that for specified business, you get a heavy deduction of capital expenditure? Entire capital expenditure, meaning the cost of the assets which you have acquired for specified business, entire capital expenditure is allowed at once. No need to claim in the form of depreciation, like a beggar. Small parts will allow you the cost. No. That happens for other businesses. But for specified business, the entire capital expenditure, entire cost of the asset is allowed fully. That is why Section 35D is there, no? So the deduction available under Section 35D is huge. And because of that heavy deduction, there are bright chances that almost every specified business will have a loss. And knowing that we allow that loss to be set off against other business income, we are not that fool. Oh, do you have other specified business? We were thinking that that business is not going to give you a profit. That business is also going to give you a loss. But fortunately, you are having a profit in that business, which you were not expecting only that you are going to earn. From that profit, if you will adjust this loss, will not feel bad. Adjust it from there. But knowing that the business is going to give you a loss, there are bright chances that loss will be calculated. Knowing this, we allow you the set off against other business income. We are not that big fool. Understanding? Hello. So, 3 heads. First head, you will have a loss, no? No. Sure. Forget about salary head. Salary head will have a positive income. Yes or no? Second head, house property head will have a loss of any house property. Can be set off inside the house property head against any house property. There is no restriction. Yes or no? Third head, PGBP. PGBP has any business, any profession. Yes or no? Any business, any profession will have a loss. Now what if the business is a speculation business? Speculation business is having a loss. So in the PGBP head, any speculation business is there, that speculation business is having a loss. Restriction is there. That loss cannot be set off against income of other businesses. It will be set off only against the income of any other speculation business only. Yes or no? Can you have a specified business under the PGBP head? Specified business will have a loss. Yes or no? So loss of a specified business under the head PGBP cannot be set off against income of other businesses. Restriction is there. It will be set off only against the profits of any other specified business. Whether for that business 35D deduction is available or not will be irrelevant. Understanding? But remember, it will be set off only against the profits of any other specified business only. Done, sir? Now tell me, under the PGBP head, will you have any normal business? Yes or no? Is there any restriction? The answer is no. There is no restriction on the set off of these losses. So normal business is having a loss, it will be set off. Set off against profits. Profits of any business. What did I say? Profits of any means which business? Speculation, yes or no? Speculation or specified or normal, yes or no? And whether this normal business income is calculated based on normal provisions or presumptive provisions. Do you remember 44 AD, 44 ADA, 44 AE, presumptive provisions are there or not? So first of all tell me, do you have any normal business? Footwear business. You are manufacturing footwear. Can that business have a loss? Normal trading business. Can that business have a loss? So loss of a normal business can be set off against profits of any business. So normal business loss can be set off against speculation profits. Normal business loss can be set off against profits of specified business also. And normal business loss can be set off against profit of any normal business. Whether that profit is calculated as per normal provisions or presumptive provisions will not make any difference, because it is said that it can be set off against any business income. Whether that business income is calculated by applying normal provisions or presumptive provisions will not make any difference. So can you set off your normal business loss against the profits of any trading business calculated as per 44 AD? Yes. Can you set off loss of any normal business against profits of any transport business calculated as per 44 AE? Yes. So even the loss of a normal business can be set off against any business income, whether that business income is calculated by following normal provisions or whether that business income is calculated by following presumptive provision will not make any difference. Understanding or not? This is your PGBP head. Most important to remember this thing. Understanding? Now capital gain is very easy. I've already told you. Which is the next head? Come on, tell me. Go to capital gain. Now in the capital gain head, will you have a loss? Which type of loss? Short-term capital loss of any asset? Long-term capital loss of any asset? Wait. Short-term capital loss of any capital asset. Long-term capital loss of any capital asset can be set off against and set off against. First of all, I have told you that long term only against. Long term cannot be set off against, and short term can be set off against short term also. And if still some loss remains, it can be set off against long term also. Yes or no? So short term capital loss can be set off against short term capital gain. Yes or no? And it can be set off against long term capital gain of any capital asset. Of any capital asset. Yes or no? But long term capital loss of any capital asset can be set off against long term capital gain of any capital asset only. Only against long term gain. Now there is no requirement to match. Loss of shares will be set off against gain of shares only. It cannot be set off against jewelry. Loss of a property, immobile property will be set off against the gain of immobile property only. No. No need to relate the assets. Any capital asset giving you a short-term loss. What did I say? Any capital asset giving you a short-term loss can be set off against short-term gain of any capital asset, long-term gain of any capital asset. No restriction on that. Yes or no? But long-term loss of any capital asset can be set off against long-term gain only. of any capital asset. So there is no need to match the assets. But the long-term loss cannot be set off against short-term gain. That is a restriction. Will you remember this? Hello, sir. Sure. Now one question I am asking you. Simple question, huh? You are supposed to give me the answer. Short-term capital loss of rupees 1 lakh. Okay. And there is long-term capital loss of rupees 90,000. Okay. Now tell me, can you have a long-term capital gain? Long-term capital gain of 80,000. Can you set off this against long-term gain? Can you set off this against long-term gain? Which one will you first set off? Why long-term? Short-term can also be set off. You can set off short-term also first. Bloody, if you will set off the short-term capital loss against long-term gain will be wiped out. Now there is no gain remaining against which the long-term gain can be set off. Now if you have short-term capital gain of rupees 5 lakhs, of rupees, even if you cannot set off this, so you have done a blunder by setting off this short-term loss against. You wiped out your entire long-term gain, yes or no? And now no long-term gain remains, so this long-term loss cannot be set off. Because the gain remaining is short-term gain. Against that, you cannot set off. So this 90,000 will remain. And now you will carry forward this 90,000. What foolishness you are doing? Don't do such type of foolishness. First set off short-term against short-term. For example, short-term gain was only 50,000. Okay, no? First set off against short-term against short-term. Can I say entire short-term gain will wiped out? Still the short-term loss will remain how much? 50,000. Yes or no? Then do one thing. Then set off long-term against long-term. Okay, no? So for example, if this is 1,80,000. Okay. So can I say entire long-term loss will be first set off? Okay, against long-term. Now, still long-term gain remains. How much? Against that, if you want to set off this can be later on set off, no? But why are you wiping out your long-term gain first to set off your short-term losses? So first set off against short-term gain, then whatever remains can be set off against long-term gains. Yes or no? Give that priority. And long-term loss was set off against long-term gain. After that, whatever long-term gain remains, from that you set off the remaining short-term loss. Understanding? That will be more beneficial. Otherwise your loss will remain, will not be adjusted. And unnecessarily you will have to carry forward. Done, sir? So, this was your capital gain. Now which head? Last head. Income from? So income from other sources. Can there be a loss from any source of income? Income of that source minus the deduction of expenses. Expenses incurred to earn that taxable income. Yes or no? Revenue nature expenses, which are usually allowed to claim, under the head PGBP. So those type of expenses you can claim from IFRS income also. So there were different sources of income. One source of income was taxed. Against that you took the deduction under section 57, and deductions were higher as compared to the taxable income of that source. So can that source give you a loss? Yes. Is there any restriction? No. Loss of any source of income under the head IFRS can be set off against profit of any source of income. But there are two important things to remember. One restriction is there. Loss from an activity of owning and maintaining racehorse. Because this activity is also a source of income under the head IFRS. So can this activity give you a loss? Majority of the time this activity will give you a loss only. Because what is the income taxable? Your horses will participate in race. They will run the race. They will always come first, second, third. Will you always get the stake money? What income you get from this activity? Your horses will participate in the race, and if your horses will win first, second, third position, then whatever the stake money which was put on your, the people have placed a bet on your horse, stake money. Out of that stake money, some amount you are going to get as your share from the race organizer. That stake money is your income, and minus the income on this activity. So the income to run that entire stud farm, expenses which is incurred to run that entire stud farm. Training expenses, you will feed the horses, maintenance expenses of your horses, jockeys will come, those jockeys will train your horses, yes or no? So you will pay the salary etc. to the jockeys. This entire big stud farm, running that stud farm, there are lot many expenses which are going to incur, and all those expenses are going to be allowed as a deduction as the income from the income. And what is the income? Stake money. Stake money may or may not be there, but the expenses will definitely happen, no? Hello? Want you maintain your horses? Want you feed them? Yes. Want you train them? Yes. All the expenses in that farm, stud farm, are going to happen on a regular basis. You cannot avoid those expenses. Expenses are going to happen. Confirm. And for all those expenses, you are going to get the deduction. But income you might not get. You might get. You might not get. Sometimes your horses are not winning. You will not get any stake money. Sometimes your horses are winning, but they are not winning that much frequently. So stake money you will get, but the stake money amount will be very less. So what if the stake money, income of this activity is less and the available deductions are more? It will result into a loss. So activity of owning and maintaining a race horses is giving you a loss. Majority of the time this will give you a loss. And knowing this, we allow you this loss to be set off against any other source of income. We are not that mad. Do you have any other activity like this? Yes. So the loss of this activity can be set off against the profit of that activity only. A similar type of activity elsewhere you are doing. So for example, one activity of owning and maintaining racehorse you are doing in Bangalore, and another activity of owning and maintaining racehorse you are doing in Maharashtra, Mahabaleshwar. So you have two stud farms, one in Bangalore, another in Maharashtra, Mahabaleshwar. Yes or no? That Maharashtra stud farm is having a profit because the stake money is higher, expenses are lower, deduction is lower, so that activity is giving you a profit. Bloody, we were not thinking that that activity is going to give you a profit. Still, fortunately, that activity is going to give you a profit. If the loss of Bangalore activity you want to set off, you can set off against that income. We will not mind it, because we were not thinking only that the other activity is going to give you a profit. Against that profit, if you set off this loss, we will not feel bad. But we are not that fool that we are going to allow you this against other sources of income under the head IFOS. So, loss from an activity of owning and maintaining racehorse can be set off only against what? Profit of activity of owning and maintaining racehorse. Yes or no? Any other activity of owning and maintaining racehorse is there? Yes. Giving you a profit? Yes. From that activity you set off this loss. But this loss will not be allowed to be set off against any other source of income. Please remember this. Yes or no? Now can you have loss from casual activities? Do you remember casual activities can give you there are chances of winning and losing. Yes or no? So some casual activity like lotteries, betting, gambling, yes or no? Horse race, those casual activities, you win or lose. If you win, it will give you winnings income. Against that winnings income, no loss can be set off. Please remember, if this casual activity is giving you what? Winnings income. Against that winnings income, set off of loss is not allowed. But what if that casual activity result into losses? Bloody every time in casual activity you are going to lose only. And knowing that if we allow the set off of these losses, then we are foolish. These losses are dead losses. I have already told you. So any casual activity is a source of income under the head IFOs, and that source of income majority of the time is going to give you a loss only. So loss from that casual activity will be ignored because that is a dead loss, not allowed for any set off, not allowed for any carry forward. But if that casual activity is resulting into win, you are winning in that casual activity. So as a result of win in that casual activity, you will get winnings income. And remember, from that winnings income, no loss can be set off. If you by mistakenly set off any loss of IFOS head or any other head against that winnings, then your answer is wrong. Because against winning, the losses cannot be set off. You have to remember that. Okay. Now tell me, under the head IFOS, can you have any other source of income? Tell me. Which is the source of income? Activity of owning and maintaining resource? No. Is it a casual activity? No. Any other source of income is there. So income of that source will be taxable minus the deductions under section 57. Yes or no? Hello, hello, hello. Any source of income which is not an activity of owning and maintaining resource, which is not a casual activity. So I am talking about which sources? The source which is not activity of owning and maintaining resource. A source which is not a casual. Any other source of income can also give you a loss, no? So the loss is resulting from any other source of income. Is there any restriction? The answer is no. No restriction. This loss can be set off against profits of any source, even against the income of activity of owning and maintaining resource. See, loss of activity of owning and maintaining resource cannot be set off against any other sources of income. But if any other source of income is there and the loss is there, that loss can be set off against any source of income, including the income of activity of owning and maintaining resource. Getting my point? Because there is no restriction there. Hello? Speculation only against? But there was no restriction on normal business loss. No, normal business loss can be set off against speculation also. Speculation business income also. So just like that, activity of owning and maintaining resource is giving you a loss. That loss is set off only against profit of similar activity. Getting my point? But any other source of income is having a loss. That loss can be set off against any income, including the income of activity of owning and maintaining resource. There is no restriction. Understanding or not? So, any other source of income is giving you a loss can be set off against income, profit of any source of income, including income from activity of owning and maintaining resources. Against that income also it can be set off. Will you remember this? Everyone? Okay. Now see, one important Supreme Court judgment that you have to keep in mind. If any source of income, if that income gives you positive income, if a source of income is giving you positive income, which income? And if that positive income is what? Exempt, as per Income Tax Act. Is it necessary that this source of income will always give you a positive income? This source can give you a negative income also. This source can have a loss also. Positive income means what? Income minus expenses, income minus deductions, expenses will give you a positive income. Yes or no? Taxable income. Done, sir? And what is negative income? Income minus expenses. Income minus might give you a loss also. So any source of income whose net positive income was there, we were exempting. So that source of income can give you a net negative income also, no? So will you set off this loss? Can you set off this loss? Or can you carry forward this loss for further set off? No set off and carry forward will be allowed for these negative incomes coming from a source of income whose positive income was exempt. Supreme Court judgment. Bloody, if the positive income was coming from that source, we were exempting, no? Then if the negative income is coming from that same source, don't claim it as a set off or carry forward. We are not going to allow any set off or carry forward of these losses. Best example I'll tell you, agricultural income. Net agricultural income. Income from agricultural activities minus expenses on agricultural activities will give you net agriculture income from a land situated in India. Fully exempt. Is it necessary that agricultural income will always be positive? It can be negative also. So will you claim the set off of that? No set off. Because if positive income was there, net agricultural income was a positive amount, we were exempting that. And now that same source of income, same agricultural activity is giving you what? Loss. Will you claim this loss for set off and carry forward? Claim, but we are not going to allow. And even the Supreme Court has agreed to that. This is a law. So if any source of income which is not classified under any of the 5 heads of income as a taxable source of income, why? Because the income of that source was exempt. So the loss of that source of income cannot be allowed as a set off while calculating your total income against the taxable sources of income. Yes or no? So the loss of that source will be ignored. We have forgotten the income, you forget the loss. Understood? Everyone? So that's it. That's it for your section number 70. Now keeping in mind these exceptions, you are supposed to first set off the losses under the head itself. Inter-source adjustment will be done keeping in mind these restrictions. So if you are doing inter-source adjustment, you have to be very careful that you follow these exceptions, follow these restrictions while doing the inter-source adjustment under section 70. Now even after following these exceptions, even after following the provisions of section 70, there is a possibility that loss cannot be adjusted within the same head. You tried to set up the loss within the same head, keeping in mind the provisions of section 70 and exceptions, yes or no? But the loss could not be set off within the head. Now, that loss will become the loss of the head. Now, the remaining loss, which cannot be adjusted within the head, will become the loss of this head. And now, loss of this head will be set off against other heads of income. Now, the second step will come into picture. What is the second step? Section number 71, which talks about inter-head adjustments. Now, what is inter-head adjustment general rule? Loss of any head can be adjusted against profit. Profit means positive income. Yes or no? Positive income of any other head during the same previous year. So in the same previous year, if you have a loss of any head, that loss will be set off against profit of any head. But you will do this only if you fail in section 70. If the losses are adjusted within the head, no, then this is not allowed. You have to anyhow adjust those losses under the head and inside the head only. This option will come only if the losses could not be adjusted within the head. So I tried my level best, but I could not set off the loss within the head. You're talking about which head? Salary head. Salary will have no loss. So first head is salaries. Salaries will have any loss or no loss? No loss. Can you have loss from house property head? House property head loss can you have? Yes or no? How can you have house property loss? For example, you have only one house property in the house property head, and that is SOP. And you are not following 115 BSc, so you claimed interest on housing loan deduction also up to 30,000 up to 2 lakhs, resulted into a loss. Now under the head house property, you have only one property giving you a loss. You don't have any other property. It will result into house property loss, house property head loss. Yes or no? Or sir, I have one more property, but that is also SOP. There also it is a loss. Then loss of one property, loss of second property, total loss. Now your house property will have more loss. Since there is no house property, it cannot be set off under the head. Yes or no? Sir. I have third property also. That is LOP, sir. But that LOP is having only 80,000 of income, and the loss of these two is 2 lakhs. Loss of these two properties is 2 lakhs, and loss of the third property is only 80,000. So can you set off the loss in the head? Yes, but only to the extent of 80. 1,20,000 will still remain. So that 1,20,000 will be loss of the head house property. So can you have a house property head loss? Yes. The loss of house property head cannot be set off within the head. So they are saying, is there any restriction? No restriction. Loss of house property head can be set off against income of any head, but to the extent of maximum 2 lakhs. So what if your house property head was having a loss of 90,000? The total loss is how much? 90, which is within 2 lakhs. So that 90 can be set off against any head of income. It can be set off against salary also. It can be set off against PGBP also. It can be set off against capital gains also. It can be set off against IFOS. But remember, not against winnings. Because from winnings, there is no set off of loss. Yes or no? So your house property loss was only 90,000. Entire 90 can be adjusted against any head. But up, because it is up to 2 lakhs. What if your house property head loss was 2,80,000? Possible. Two SOPs you are having. Both the SOPs total loss 2 lakhs. Yes or no? Because interest for both the properties cannot be more than 2 lakhs. You remember, no? So for both the properties, the total loss is 2 lakhs. And there is one LOP. LOP is also having a loss, 80,000. So how much is the total loss? That is a loss of house property head. Can be set off against any head, but to the extent of maximum, remaining 80,000 cannot be set off in this year. You will have to carry forward. We'll have to, this year maximum we are going to allow 2 lakhs. Yes or no? Against any head. Against. But remember, this you can follow only if you don't follow 115 BSc. So what if you follow 115 BSc? Then loss of your house property head will be ignored. It was supposed to be allowed as a set off against other heads, no? Up to 2 lakhs will not be allowed as a set off only. So sir, what to do? Should I carry forward? No, it will not be carried forward also. So if you don't follow 115 BAC, then the house property loss can be set off against other heads. See, there is no restriction inside the head. Whether you follow 115 BAC or you don't follow 115 BAC, inter-source adjustment will happen as it is. Loss of any house property under the head house property can be set off against profit of any house property. Within the head there is no restriction. But if the house property head is having a loss, now the loss cannot be set off within the head. Now you will set off this house property head loss against the profit of any other head. But to the extent of maximum allowed, but only to the extent of 2 lakh, and remaining will be carried forward. But that you can do only if you follow. But what if you follow 115 BAC? This is not allowed. Not allowed means this year whatever house property loss was there up to 2 lakh, you were able to set off no against other heads. Will not be allowed as a set off. Oh, so you want us to carry forward? No, this loss will not be carried forward also. Because bloody, if you wanted to give you, we would have given you this year only, no? So that entire loss will lapse. So you decide whether you want to claim it or not. Understanding? So I will write down here, very, very important. And last attempt, no? January 26 attempt. Or before that. Exactly I don't remember, but any of these two papers. This exact same point was asked in the exam. Exact same point while calculating your total income question. So, loss from house property head can not be set off or carried forward, cannot be set off or carry forward if assessee follows 115 BAC. Yes or no? If he follows 115 BAC, then it cannot be set off in this year up to 2 lakh and it cannot be carried forward. Done, sir? First head, no loss. Second head, house property. House property head will have a loss. That loss can be set off against any head up to maximum 2 lakhs. Remaining excess will be carried forward. But that you will be done only if you shift out of default tax regime. But if you follow 115 BAC, you don't shift out, then the loss of the house property head cannot be set off against any head up to 2 lakhs. That set off is no more allowed and even it cannot be carried forward. Okay. Third head, PGBP loss. But this PGBP loss due to speculation business, possible or not? So can I say, I am saying that loss under the head PGBP, and that loss under the head the PGBP because of any business, and that business was a speculation business, specified business or normal business. Now speculation business only against within the same head, only within the, because speculation business income you cannot find under other heads. So now what if bloody we don't allow the speculation losses to be set off against other business incomes? Will we allow this loss to be set off against other heads? No. Within the head also we don't allow it against other business income. So how can we allow it from other heads of income? So loss under the head PGBP is there from a business, and that business is a speculation business. Interhead adjustment of this loss, possible, not possible? Not possible. It will be directly carried forward. It will be directly carried forward under section 73. So you set off the speculation loss within the PGBP head only against speculation profits. Under any other, under the head PGBP from other businesses also we don't allow. So how can we allow you against other heads? Its interhead adjustment is not possible. It cannot be set off against income of other heads. Yes or no? Same thing applicable for loss of specified business. Yes or no? So even the loss of your specified business can be adjusted within the head PGBP only against the business profits of any other specified business only. Yes or no? We don't allow it to be set off against other business incomes. Will we allow it to be set off against other heads? No, its interhead set off is not possible. Directly carry forward as per 73A. Which section? 73A. It will be carried forward to subsequent years. Understanding? And what about the loss of normal business? Normal business loss can be set off. Can be set off against profit of any head. What did I say? Any head except salary. It cannot be set off against salary head. So your business loss can be set off against house property income? Yes. Your business loss can be set off against capital gains income? Yes. Your business loss can be set off against IFOS income? Yes, but not against winnings. Because from winnings, no loss can be set off. Do you remember that? But your business loss you cannot set off against salary head. It is not allowed. So whatever is your normal business loss, whatever is your normal business loss. So PGBP head is having a loss and loss is from a normal business. That loss will be set off against any head except salary. It cannot be set off against salary. Why? Because salaried people in India are highest taxpayers. Knowing that I would get the set off of business loss, a salaried person can always start any business. And who goes to see that whether that business really exists or not? And that person will start a business on business income, very less. And he will try to show the expenses like rent paid to brother, commission given, this, that. Expenses are many which will be allowed under the head salary. And for all those expenses he is going to take the deduction. Unnecessarily he will calculate what? Business loss. And then he will set off this business loss against his salary income so that he don't pay tax on the salary income also. And calculating a business loss is not a big deal. Anyone can calculate a business loss. But then in that case, we'll have to verify the business loss of each and every person. That will increase the workload also. Yes or no? Whether the business loss calculated is genuine or not. In small, n number of transactions, wherever all the salaried employees who have started their business activities, small business activities resulting into small losses. Just imagine in all those things we'll have to put our time to verify whether these losses calculated are genuine or not. Expenses claimed as a deduction are genuine or not. Then we'll have to involve in each and everything. And this volume, because of the volume, the losses will be huge. In all the cases, just imagine if some assessee is earning a salary of 10 lakh. He does not want to pay tax on that 10 lakh rupees of salary. What he will do? He will start a business. Some assessee earning 5 lakh salary. He will start a business. Every employee will start a business. Their business operations will not be big. Either no business operations or very less business operations. Giving him always what? Lesser income or no income. But expenses, all types of expenses, now he will try to show as his business expenses and claim the deduction. Thereby, almost every salaried employee who will be doing a business will calculate what? Loss. And that loss he will set off against his salary and he will not pay the tax on salary income also. And see, we don't mind that you do the business. Do the business. Claim everything genuinely. But all the employees will not do that genuinely, no? And to check that loss is calculated from the business genuinely, we'll have to involve in the calculation for each and every employee. And how many such employees are there? Just imagine. Lakhs, crores of employees. And everyone will start doing it, then we'll have to bloody check that the losses calculated by everyone are correct or not. Just imagine how much time will it consume. It will consume huge time, and unnecessarily the burden will be on the income tax department. We are not going to allow that only. Oh. Claim it from other incomes. No, don't claim it against salary. We are not going to allow. Yes or no? Next one. Which head? Come on, tell me. Capital gain head. Can you have a loss? Which type of loss? Short-term capital loss and long-term capital loss. Short-term only against? No, sorry, long-term only against? Cannot be set off against? Bloody, if we don't allow it under the same head against short-term also, do you expect it to be allowed under other heads? No. So even the inter-head adjustment, what did I say? Inter-head adjustment of short-term capital loss is not allowed. Sorry, long-term capital loss. And even for short-term capital loss it is not allowed because it is a capital loss. The income chargeable under the head capital gain is of capital nature. How do we allow that income against other four heads of income? Usually the income taxable under other four heads are revenue in nature. Salary income, revenue in nature. Business income, revenue in nature. Yes or no? Then PGBP income, revenue in nature. Majority of the IFOS income, revenue in nature. Knowing that all the incomes under four heads are revenue in nature will be less only. Yes or no? And against that, how can we allow these losses of capital nature, which will not be a small loss, will be a huge losses? We cannot allow the set-off of these losses. So any loss, whether it is a short-term loss or a long-term loss, will be adjusted within the head itself. Yes or no? Short-term against short-term, long-term both. Long-term against only long-term. Yes or no? But if you want to claim it as a set-off against other heads of income, we are not going to allow. If short-term loss cannot be adjusted within the head, it cannot be adjusted against other heads. Directly carry forward. Yes or no? Carry forward as per which section? Carry forward under section 74. Long-term loss adjusted within the head only against long-term gain, not even against short-term gain. If it cannot be adjusted within the head, what we are going to do? We are not going to allow you against other heads of income. Directly carry forward. Will you remember all these things? Yes, sir. Because all these things are very, very, very important. If you will not remember all these things, you will not be able to solve a single question. Okay. So by heart all these things. By heart. Twice or thrice you will read this chapter now. 10 minutes, 15 minutes revision. Everything will be, printed in your mind. It's so easy. And last one. Income from other sources. Loss can be there. Loss from what? Tell me. Activity of owning and maintaining racehorse. Racehorse. We don't allow it against other sources of income under the head IFOS. Will we allow this against any other head of income? So inter-head adjustment is not possible. Inter-head adjustment is not possible for this loss also. Yes or no? So activity of owning and maintaining racehorse, inter-head adjustment not possible, meaning it cannot be adjusted against income of other heads. It will be directly carried forward as per 74A. It will be directly carried forward under section 74A. Will you remember? Now, loss from casual activities. What are you going to do? Tell me. Dead loss. Ignore. Bloody, we don't allow it as a set off or carry forward. Yes or no? Dead loss. Ignore. Now tell me. Loss from any other source of income. First of all, what are you going to do? Set off this loss within the head IFOS. Hello? If it cannot be set off, first of all, if you will set off Can you set off against all the sources under the head IFOS? Yes, except winnings. Even you can set off against the income of activity of owning and maintaining resource. But still this loss cannot be set off. Now this loss will become the loss of IFOS head. Now this loss will become the loss of IFOS head, and it will be set off against any head of income. There is no restriction. Set off against any head is allowed. There is no restriction. Understanding or not? So loss under the head IFOS from any source of income, first set off within the head against any source of income except winnings, but including income of activity of owning and maintaining resource. But still it cannot be adjusted. Then this loss become the loss of IFOS head. IFOS head loss. Yes or no? Will be set off against any head of income. Will be set off against any head of income. There is no restriction. Will you remember all these restrictions? Yes or no? But even after doing all these things, loss cannot be adjusted in this year. Then carry forward. That we are going to do after the break. Take a small break and then we are going to meet and continue the carry forward. Once the carry forward provisions are over, the chapter is over. Okay? Then we'll start with the questions.